The government yesterday stunned the markets with a lower than expected fiscal deficit, a full 80 basis points lower than the deficit for FY24. Much of this is not because of expenditure cuts, but because of revenue doing very well. So we have with us the Revenue Secretary, Sanjay Malhotra. Thank you very much, Mr. Malhotra.
My pleasure.
Well, that really is the first question. I mean, you have done extremely well on revenues, a buoyancy of 1.4 times I have not seen in my reporting career. What accounted for it?
Obviously, you know, it's a combined effort, the taxpayers and the tax authorities. So we need to thank our taxpayers as well for it. A lot of it is, of course, due to the use of technology. Third-party information coming in. And also, I would say, you know, a lot of it is also because of the simplification, the rationalization of taxes that have happened, you know, over the years. So you make things simple, you remove disputes, you get taxes today, rather than, you know, hope to get larger tax revenues in the hope of getting larger tax revenues on a future date, you don't end up getting anything. So a lot of it is basically because of, and the trust, you know, that has been placed by the government, do less of, you know, self-certification,
Yes.
return filing has been made easier. So it's a combination of the efforts of the last 4 or 5 years that are beginning to pay the dividends.
Okay, but in that case, why not assume a better buoyancy for FY25? Why bring it down so much? 1.4 comes down to 1.1. Why?
You can't expect the benefits, you know, to continue year on year on year or on year. There is as much, you know, as one can actually expect, you know, technology and the various measures that the government has taken to do. Okay. And so I think we would be overplaying the effects of the measures that we would have taken, and we would really, you know, be not realistic. It is a very realistic number that we have given, and we hope to achieve it.
When it comes to the numbers, sir, if we see the breakup of the revised estimates, 19.45 is the number on the direct tax side. Also, you see that the numbers, that is the budget estimates for the coming fiscal, that are also about 21.9. How do you see that personal income tax for the first time we are seeing overtaking the collections of the corporate tax? Till now, they were a laggard. Last year, they were trying to be neck to neck, and now this number is going to overtake the collections of corporate tax. How are you going to expand the tax base to get more people under the personal income tax? Because
and more importantly, it's not even fair. I mean, corporates should pay more.
Exactly. I mean, that's the idea how we have been, that the corporates have to take up the burden more as compared to the personal.
I don't know why you say, you know, that the corporate tax should contribute more. Let's keep in mind that a lot of the income that is taxed and which accrues as personal income tax is also on account of companies, you know, when they pay dividends, when the people, you know, earn their salaries, you know, from the corporates. So those incomes are also, you know, getting taxed. So there is a double taxation, as you are all aware, you know, on companies when they pay taxes, and on the dividends which are part of their profits. So there is already, you know, a double taxation on companies. Coming to the point, very relevant, which is really a matter of happiness, you know, for all of us, that personal income tax is doing so well. The growth there is much more than, you know, on the corporate tax side. And this is precisely where, you know, the various measures that we have taken, whether it is use of technology, which I mentioned, or the rationalization and simplification, because the burden is actually, you know, borne more by the individuals rather than the corporates. And so that's why, you know, we see more benefits there. I mean, otherwise, I don't find any other reason.
But expanding the tax base, because we are talking about the tax to GDP ratio, and that has been an exercise that the department has been undertaking to expand the tax base so that only then there can be a reduction in taxes. And you know, reduction in taxes has been a demand that comes forever. Whenever there is a budget, everyone, the common man is actually waiting to hear out the part B, that what are the tax changes on the personal side. I know you had sweetened the deal last year on the new regime, but yes, there was still an ask that again there will be something since this is a vote on account budget.
Yeah, so as you have said, personal income tax and corporate income tax, both the tax base, first of all, let's come to the tax base. The tax base has doubled for GST since its implementation, you're all aware. So from 67 lakh to more than 140 lakh is more than double over a period of less than 7 years. And similarly on the income tax side also, the FM gave in her speech, 2.4 times is the tax base now vis-a-vis about 10 years ago, less than 10 years. So the tax base has certainly widened, it has grown. As for exemptions, last year you yourself mentioned, we gave, the Honorable Finance Minister, gave a lot of reliefs for the new taxation scheme. And corporate tax rates are already, very reasonable. 2019, they were reduced.
Mr. Malhotra, on a more serious note, the China plus one ambition is very much there, and plus the PLI schemes are taking off. It takes time to acquire land and go ahead. So there is a genuine ask that not for 1 year, but can it be extended for a few years so that we genuinely capture more manufacturing units?
Exactly.
Isn't that a thought?
So exactly, I mean, the ask is there, of course, as you are saying, because you are the voice of the people. So
no, the ask was if you had extended it, then by the time the main budget came, it could have been debated. Wasn't that a thought in the government's mind?
You see, as you have rightly said, investments take a number of years actually to fructify, on the ground, from the conceptualization stage to implementation to financial closure, and then, getting them to operationalize. It's a multi-year project. It's not a one-year project. And this is a vote on account. And it was made very, very clear, 2019, that we are giving you 4 years. Otherwise, there's no certainty. Right?
So, but PLIs are yet to take off, and new manufacturing units are coming up in that. That is why they were looking that, now that the PLIs are becoming more attractive, corporates have started evaluating them more seriously, and now they are in the mood to set up the units, because even the corporates were coming up with the after effects of COVID. Definitely last year there was an extension, but yes, another extension was warranted. That's what the private sector was looking at, given the government's push towards private sector investment, and this would have meant both investment and more employment. But this demand continues to remain.
What's your view on it?
Yeah.
No, so as I said, taxation is only a very small part of it. I think one has to look at it, holistically. So there is, the PLI scheme, there are, the whole ease of doing business, that the government has been not only talking about, but actually implementing. Now, of course, the World Bank does not come up with the ease of doing business reports, but we grew, we moved up the ladder insofar as ease of doing business is concerned. And I think those are more important factors than taxes, really, to get in the investments. And the ecosystem today, I think, insofar as India is concerned, whether it is China plus one and even otherwise, is looking very bright. And so we are very hopeful that even with these tax rates, which are very, very reasonable, 22% of tax rates for an economy of our size, given what comparable economies have, is very attractive. And we are very hopeful that even with these tax rates, given the improvement that we have done, on the ease of doing business front, and the other schemes, that are again, there to support the industry, we should continue to get more investments.